In 2018, President Trump imposed tariffs on billions of dollars worth of goods imported from China. This unprecedented move sent shockwaves through the global economy and ignited a fierce debate about the future of U.S. manufacturing. The stated goal of these tariffs was clear: to revitalize the American manufacturing sector, which had experienced a steady decline in previous decades. Trump's vision hinged on several key objectives. First and foremost, he aimed to bring back factory jobs that had been lost to overseas competition. The allure of well-paying manufacturing jobs held a powerful appeal, particularly for those communities hit hardest by factory closures. Secondly, the tariffs were intended to spur investment in American manufacturing. By making imports more expensive, the Trump administration sought to create an environment where companies would find it more attractive to produce goods within the United States. Finally, the tariffs were part of a broader strategy to reduce America's reliance on foreign manufacturing and bolster its economic independence. This desire for self-sufficiency, often framed as a matter of national security, resonated with a segment of the American public concerned about the country's dependence on global supply chains. However, the implementation of these tariffs came with no guarantee of success. Critics argued that they would harm American businesses and consumers by raising prices and disrupting established supply chains. The ultimate impact of Trump's tariffs on U.S. manufacturing remains a subject of intense debate, with proponents pointing to initial investments and opponents highlighting the potential for long-term economic harm. The initial response to President Trump's tariffs was mixed. While many businesses expressed concerns about the potential negative consequences, some large corporations saw an opportunity amidst the uncertainty. Taiwan Semiconductor Manufacturing Company, the world's largest contract chip maker, announced plans to build a $12 billion manufacturing facility in Arizona. This move, hailed as a major victory by the Trump administration, was seen as a sign that the tariffs were having their intended effect of attracting foreign investment in American manufacturing. Similarly, South Korean automaker Hyundai committed to investing $5.5 billion in a new electric vehicle and battery plant in Georgia. These high-profile investments fueled optimism that the tariffs could indeed jumpstart a resurgence in U.S. manufacturing, bringing with them the promise of thousands of new jobs and a boost to local economies. These companies were enticed not only by the prospect of avoiding tariffs on their products, but also by the potential benefits of being closer to their American customers. However, it is crucial to note that these large-scale investments were not solely a response to the tariffs. Factors such as access to skilled labor, proximity to research and development hubs, and favorable state-level incentives also played a significant role in these companies' decisions. The Trump administration's aggressive trade policies undoubtedly influenced their calculations, but it is essential to acknowledge the complex interplay of forces at play. While large corporations like TSMC and Hyundai made headlines with their multi-billion-dollar investments, the experience of smaller manufacturers painted a more nuanced picture. Many small and medium-sized enterprises found themselves grappling with uncertainty and volatility in the wake of the tariffs. The constantly evolving nature of the trade war, with its fluctuating tariff rates and shifting targets, made it challenging for businesses to plan for the future. The imposition of tariffs on raw materials and intermediate goods from China, for instance, disrupted supply chains and increased costs for many American manufacturers. For SMEs operating on thin margins, these increased expenses proved difficult to absorb, forcing them to raise prices or accept lower profits. The uncertainty surrounding the duration and scope of the tariffs also made it difficult for businesses to make long-term investment decisions. Moreover, the tariffs did little to address the underlying challenges faced by American manufacturers, such as the shortage of skilled labor and the increasing complexity of global supply chains. For many SMEs, the promise of a manufacturing renaissance rang hollow as they struggled to navigate the turbulent waters of the trade war. The tariffs, while intended to protect American businesses, inadvertently created new hurdles for those they were meant to help.